Dear students, welcome you all to the session 9 video of Cost and Management Accounting 3rd semester BCom. This video is about the preparation of cost sheet. The format of the cost sheet is given here. Now, cost sheet of the name of the company, cost sheet for the period ended, the period for which the cost sheet is prepared, and then the production, how many units were produced for production, whether it's 1000 units or 5000 units or 10,000 units, number of units produced that has to be written. Now we have different columns here. So the first column here is elements of cost. The second column, it is the inner column to do the calculation. Then third column, units, number of units. Then total cost, rupees. And the last column, cost per unit. So we have cost sheet, as I have already told you, helps us in finding out the total cost as well as the cost per unit of the product. So in the last session we have seen the different heads of the cost, like the prime cost, factory cost, production cost of production, and cost of production of goods sold, cost of sales or total cost. Now we will see how these are found out. So first one is the prime cost. Prime cost is the sum of direct materials, direct labor and direct expenses. So direct materials. Now imagine we are buying materials for a particular period. It may not be possible for us to use the entire lot of materials which we have purchased, isn't it? Some stocks may remain there. We call it as closing stock. Some some of the materials may not be of the standard. We may return it. Some may be damaged, or so many aspects will be there. So what we will be doing is we'll have to do some adjustments. That is opening stock of raw materials. Okay? Last year's raw materials which were remaining there, it becomes the opening stock of this year, opening stock of the direct raw materials. Add purchases. We are purchasing this year. Whatever we have purchased this year, we need to add. Transfer from other department or job. If you are getting materials from other department, that has to be added. Then any expenses incurred in getting these materials, that is while purchasing as well as bringing these materials to the firm, we have to add. That is carriage inwards, the expenses incurred in transportation. Octroi. Octroi is actually a duty which is levied when goods come from one country to another. Then import duty, again a duty imposed by the government. Dock charges, the ship charges and all. And primary packing materials. So any expenses incurred in bringing these materials or purchasing these materials are added. Then less, we'll have to deduct transfer to other department. If you are transferring the materials to other department, then we will not be using it, isn't it? To that extent, the materials will be reduced. Materials lost or damaged. If materials are damaged, then we will not be able to use it. So to that extent, again, the materials are reduced. Materials sold. If you are planning to sell the materials, we won't be using it for our purpose. Returns outwards means the purchase returns. If you are returning to the supplier, maybe because of a lack of quality or any other matter, or the material will not be used. At the same time, closing stock. Closing stock means the materials which are not used. It remains there, isn't it? So these items have to be deducted. So opening stock of direct raw materials, add purchases, transfer from other department, carriage and all other expenses which are incurred in bringing this material, less transfer to other department, material lost, material sold, return outward, that is purchase return, and closing stock. What we get is cost of direct materials consumed. So we get the first aspect, that is direct materials consumed. What is the next one? Direct wages or direct labor, or it's called as productive wages, or it's also known as factory wages. That is, these are the wages which are paid to the workers in the factory. These can be directly identified with the product or with the cost center. Then direct expenses or chargeable expenses. They are also known as chargeable expenses. These are the expenses which can be identified directly with the product. So three aspects. What are those? Direct materials, direct labor, and direct expenses. What we get is prime cost. So what we will be doing? So here we will be recording the number of units we have produced. Here we will be writing the total cost, and we will be finding out the cost per unit. Now, to the prime cost, we are adding factory or works overheads. So overheads means all the indirect material cost, indirect labor cost, and indirect expenses incurred in the factory for the purpose of production or manufacturing. We call it as factory or works overheads. So there are many items here. We look into each one of them. That is indirect materials, oil, waste, grease, coal, fuel, gas, water, steam, consumable stores, works, stationery, indirect or unproductive wages. Now these are now, for example, the wages of the storekeeper and all. That is, they are not direct wages. Wages of the foreman, wages of the works manager, storekeeper, supervisor, inspector, all these comes under this. The next aspect is drawing office salary. So drawing office salary means it is actually the salary paid for drawing the production chart and all. Since it happens in the factory for the purpose of production, it is included in the factory overheads. The next one is purchase expenses, purchase department expense, service department expenses, research and development expense, security or timekeeping expense, workers training or recruitment expenses, welfare expenses. For example, employee state insurance. Insurance facilities will be given for the employees, as well as provident fund, workers compensation, work managers bonus, canteen or any other recreation expenses incurred for the workers. It means all these are related to the workers in the factory, like factory expenses, factory heating, lighting, factory rent, factory insurance, factory cleaning, repairs or maintenance of the factory building or plant and machinery, depreciation of the factory building, depreciation of the machinery, depreciation of the loose tools which are used in the factory. Material handling, any expenses incurred in material handling, expenses incurred in internal transport. It is also known as haulage. Means now, for example, if you want to transport material from one department to another department, we use haulage or internal transport. Any loss of materials, normal loss. We have classified the cost into two types. I hope you remember, normal cost and abnormal cost. Normal cost is which happens in the normal functioning of the business. So any loss of materials, for example, evaporation of the chemicals and all, comes under normal loss of materials. Normal idle time cost, that is workers not working but wages are being paid. Now, for example, setting up of a machine, we require some time. At that time, workers won't be working, but wages have to be given to them. It is normal idle time. Rectification cost of defective work. If the work is not up to the mark, of there is any problem with the product which you have manufactured, we need to rectify it, whatever cost incurred for that. So all these are factory overheads. Now from this, we'll have to deduct the sale of scrap or defective work, which means if we are selling scrap items or any defective items, we get some money, so that has to be deducted from that. Then there is an adjustment regarding the work in progress. Add opening stock of work in progress less closing stock of work in progress. Work in progress, means the units which are not yet complete, but on which some work has been already done. Now we need to value it. Now last year's unit work which is not complete, we'll be adding it, and we will be deducting the work in progress of this year. So we have adjusted the work in progress. When we do all these adjustment, that is adding all the factory overheads, then the adjustment regarding the work in progress and closing stock of work in progress, what we get is the factory cost. or it is also known as works cost or factory cost. Now, to the factory cost, we are adding the office and administrative overheads. So, what are office or administrative overheads? It is the indirect material cost, indirect labor cost, and indirect expenses incurred in the office for the purpose of administration as well as general management of the firm. Now, that is, you can just see one by one: salary of the office staff, salary of the manager, salary of general manager, counting house salary. This is an item. Now, what is this counting house? It is actually, it was a term which was used in the earlier period, which was actually for the accounting house wherein the counting was actually being done. So that is considered as office overheads: office rent and taxes, printing and stationery, office lighting and heating, sundry office expenses, establishment charges, depreciation of the or repair of the office equipment, furniture, building, directors' fees, telephone, telegraph, postage. We have telegraph, and we don't have it now, isn't it? Postage, even postage charges are very less now. Why? Because we live in a world where information is sent within fraction of a second actually. Audit fees, the fees involved in checking the books of account, legal expenses, that is a fees paid for lawyers and all, bank expenses, subscriptions to periodicals or trade journals. The manufacturing firms, they need to be aware of the latest trends, so they need to get these journals relating to their manufacturing process as well as the machines and all. So they'll be getting all these periodicals or journals. All these are the office or administrative overheads. So administrative overheads are all the expenses incurred in the office for the purpose of the general management. So all these will be added to the factory cost. What we get is the production cost, or we call it as the cost of production. Production cost or cost of production. Now we have to adjust the stock of finished goods. Now, last year's finished goods which are not sold is to be added. That is opening stock of finished goods. That is the actual cost incurred last year for producing this has to be added, less closing stock of finished goods. So this year some items may not be, we are not planning to sell it, that will be remaining there. So what happens is we have incurred the cost but we are not going to sell those items, so that has to be deducted. So for here, for the we have to find out the value of the closing stock of finished goods. How do you find the value? What is the number of units which are remaining, that is the quantity of unit, multiplied with the current cost of production. What is the cost per unit? So here we'll be able to find out here the cost of production for 1 unit, that we have to find out now. That is, how do you find this closing stock of finished goods? We are going to find out, that is the quantity of closing stock multiplied with the current cost of production per unit. So what we get after adjusting the finished goods, we get production cost of goods sold. Production cost of goods sold. So you see here, this is cost of production or production cost. This is production cost or cost of production of goods sold. Only those goods which are sold. This is all the goods which are being produced. So we are not going to sell all the goods, isn't it? So we are adjusting here last year's any pending finished goods that we are adding, because we are planning to sell it first, and then this year's finished goods which we are not selling will be deducted from that. Then we are adding the selling and distribution overheads, the salary of sales staff, delivery van driver, commission, traveling expenses, advertising, catalogs, folders. Catalogs means the complete list of items, samples, free gifts, showroom expenses, demonstration expenses, trade fair, exhibition expenses, sales office expenses, rent, depreciation or delivery van, warehousing charges, packaging, containers, finished stock insurance. Now goods will be insured when we are transporting it from one place to another. That insurance, after sales expenses. Now what happens is once you sell a particular product, you need to install it and all other expenses have to be incurred, all those things. And carriage outwards, that is the transportation charge involved in getting the goods out of the factory to the place of the customer. So all these are the overheads incurred for selling as well as distribution, they will be added. And then there are other items which are to be added, that is you have to see this is a special, that is other interest and financing charges for production of goods or operation or service rendered under cost accounting standard 17. These two items are also there. Earlier these items were not there. Prior to 2014 these items were not considered. So one is interest on bank loan. So any loan taken for production purposes will be considered here, that is the bank loan interest will be added here. And cash discount allowed on sales, any cash discount which is being given to the customers, that will also be considered here. So earlier these two items were not considered, so the cost accounting standard 17 has brought these two items here, that is one is the interest on bank loan which is taken for a production purpose, and cash discount allowed on sales. If you refer any old books, then we will not see these items. So it is from the year 2014. So when you add selling and distribution overheads, and afterwards these two items as per cost accounting standard 17, what you get is the cost of sales or the total cost. And then you have the sales, isn't it? What are the number of units sold, the total amount we have received and per unit. Then we will be able to find out the profit or loss. Sales minus the total cost will give you the profit or loss. I hope you have understood this. We have seen the different heads of income, that is the prime cost, which is actually direct materials plus direct labor plus direct expenses. To the prime cost, we have added factory overheads. We got the factory cost or works cost. To the factory cost, we have added office or administration overheads. We got production cost or cost of production. Then we added opening stock of finished goods and deducted closing stock of finished goods. We got production cost of goods sold. To the production cost of goods sold, we have added the selling and distribution overheads and the two items as per cost accounting standard 17. We got the total cost. Then from the sales, if we deduct the total cost, we get the profit or loss. So this is the format of a cost sheet. The columns which are used: units, total cost and cost per units. Dear students, if you have any doubts regarding this, please do inform me. Thank you.